So here we are again in English for a second roundtable on with a focus on industry. We have the pleasure to host today Jérémie Béchache. Jérémie, you're a sales director for Fireblocks in France. We also have with us today Andy Flury. Andy, you're the CEO of Wyden. And Alexis Portz. Alexis, you're a partner at Truffle Capital. I will ask questions for you all and maybe let you introduce your company very briefly after my first question. My first question is, so from your perspective, whether you provide infrastructure or you invest in crypto assets, what are the key drivers of institutional adoption in digital assets today? And are there particular sectors or use cases where you see real momentum?
Should I start? Okay, Alexis Portz, I'm a partner at Truffle Capital. So Truffle is a fintech dedicated fund operating all over Europe. And we just did actually an investment in Wyden in October, so very happy to be on stage. I mean, we had already a lot of talks, and it's part of the Paris Blockchain Week, so I'm sure you heard a lot about the different use cases are very, very hot right now. I think access to the asset class is a given, and yeah, I don't know one bank that's not one way or another looking at digital asset or blockchain in a ways. It's either access to the asset class or working on CBDCs or tokenized assets, etc., etc. So everybody's going there. I think stable coins, digital payment, cross-border payment is a huge driver for adoption as well. Asset class, I think it's going to be commoditized in months or maybe years, but I'm optimistic, so I'm going to say month. And also tokenization of assets is a massive topic. Obviously, it needs to be to provide a return on investment, not just tokenize every type of asset for the beauty of it, but bring operational efficiency for big players. That's my take.
Try this one. Andy Flury, founder and CEO at Wyden. We're a Swiss fintech company. We provide the infrastructure to financial institutions, so the entire plumbing, the internal plumbing necessary to offer digital assets. From my view, and first of all, apologies. I think I'm the only one here not speaking French, so I guess I'm the reason why we're doing this in English. So apologies for that. From my view, from our view, and we have been supporting banks for quite a while. The adoption is the regulation is a big topic. That's a big enabler. Today, we have been talking about tokenization for many years. It's not really a use case today. We're all hoping that it will be soon. The real use case today, the real revenue case today is crypto, right? Again, I'm from Switzerland. We have had the DLT Act in Switzerland for 4 years. Literally 50% of banks in Switzerland now offer crypto and digital assets. And this has become a main part of their business. It's become a commodity. If you select a bank in Switzerland, you expect the bank to offer crypto. You go to someone else. Now, I think what's still a little bit missing, and that's what we are working on, Fireblocks and Wyden and many others, is the infrastructure. This whole asset class requires a new technological infrastructure, which is still being built. A lot of parts are already there, but we need to convince the banks that we can actually deliver at scale for mass adoption for potentially millions of customers.
Thank you. We are echoing ourselves. Basically, so I'm Jérémie. I'm indeed leading Fireblocks activity in France. Fireblocks is a technology provider, initially that was resolving the very painful point around the security of the interactions with the blockchain, meaning the private key. And that quickly became a wallet infrastructure on top of which you can build like a suite of applications to access liquidity, to tokenize to orchestrate, design and orchestrate payments. And we are indeed partnering with a lot of other providers, such as Wyden, for compiling and providing an end-to-end solution to our clients that are institutional. The aim being to offer them a way to securely, compliantly, and quickly launch and scale up their digital activities. So as a solution provider, it has been said already, that technology-wise, I think we are ready. There is a clarity around regulation. The environment is safe from that point of view. And indeed, we need banking services to ignite this mass market adoption. So to your question, what is missing today, perhaps, is this mass market adoption, is banking services. I know some are working on this, obviously, but this is something on which there needs to be an acceleration, I guess. One of the key points, if we are not doing it quickly, it's that we are opening up, thanks to the clarity of the regulation, the door to foreigners, foreign competitors that are coming from UK, that are coming from the US or from APAC, and that will take market shares to the banks. Think about, I had a conversation very recently with a leading digital bank in France that is losing several dozens of millions of deposits each month to a UK competitor offering the same services, but with cryptos. That's, I think, one of the main things that needs to be addressed quite quickly in France.
Thank you very much. So indeed, very strong momentum. However, many institutions are still taking a cautious approach to Web3, often experimenting rather than fully committing. In your experience, what are the main blockers that remain, and what conditions would help uphold more full-scale institutional engagement?
Maybe I'll go. I mean, the regulation was one piece that was missing for a long time. I think that's now solved. We have the regulatory clarity. Crypto and digital assets have a few quite unique characteristics. For example, the fragmentation of liquidity. We're talking about 600 or more exchanges versus a few global big players in equity markets. Risk security, right? We had all those breaches, FTX, whatnot, that blew up. Dealing with digital assets means you are relying on a blockchain which is outside of your control. It's now no longer your core banking system, it's an external system. And you have to rely on the middleware in between to function. If your keys are lost, the assets are gone. That's a paradigm shift that institutional players have to get familiar with. And then we're still fighting a little bit with the lack of standardization. There are many blockchains today. A few are very popular. There are a few that are less popular. Different asset classes, smart contract interoperability. So we as an industry have to work on the interoperability topic and make it more accessible to the wider audience. And then last thing to mention is, again, this is a new topic for many institutional players and banks. There are often knowledge gaps, right? These institutions have to build up the knowledge necessary to launch an offering.
There's also something that's very interesting about this asset class. It's an asset class and it's a tech in the same time. So it can make it, and it made it very confusing for people in banks to apprehend what it actually is. And the volatility that we had over the years didn't really help, obviously, because it was quite scary. It's less and less scary on Bitcoin. I mean, it's been pretty resilient so far. So it looks like any type of stocks that is in the market right now. It's very correlated to the S&P 500. So, I mean, why treat it differently? it's a type of proxy to the market in a way. But it has been, very, hard to understand for a lot of people. It's a very tech. If you don't work in finance, if you don't understand the way centralized network works, etc., you don't understand. It's very hard to grasp why a decentralized network would bring value to anything. What is a tokenization, etc., etc. So that has been a very big hurdle. But I think, I see a lot of familiar faces in the room, so, we've all spent tremendous, as Donald Trump would say, time educating, everybody on the topic, and now we see, I think, a real acceleration on that. So it's been tough, but it's getting easier.
As from my perspective, from a liquidity standpoint, to answer your question, of course, from a liquidity standpoint, there are a lot of partners that can bring this liquidity and help fund the projects. From a cybersecurity perspective, we now have technologies that are, like Fireblocks, of course, that are MiCA compliant, helping the clients to meet the regulatory expectations and to recover the key in case it is lost. We have different infrastructures. It can be SaaS, it can be on-prem, it can be hybrid. We have a procurement process that is streamlined, for instance, via cloud marketplace. And last but not least, we have seen that there is a growing demand, and it's already here for years. And access to the liquidity is brought as well. So what's basically missing as of now is top management of largest financial institutions to seize the momentum. Why there is such reluctance? I have my own opinion, but to say it as neutral as I can, I think that most of the people that are taking decisions today in traditional finance are people with a very extensive experience, but that are thinking by analogy with disruption that they have lived in the past, but that are lacking perhaps a bit of understanding this digital native innovation, which is the blockchain, and how it can revolutionize definitely the whole banking processes. So we are dealing with people of goodwill that are leading blockchain projects, but that I think, again, it's something that I'm seeing, and that's my own words, but that I think are perhaps facing a hard time when it comes to onboard the decision makers that may, for internal political, or for ideological reasons, be stuck in, too traditional decision, I would say.
Could I add something very quickly as well? I think it's also the relationship that we have with time and investment, because it's the sense of history. I think we can all agree in this room that the future will be tokenized. And if you focus too much on projects that have a short-term return on investment, you will have a hard time most of the time to see the value that it really brings. But the incumbent players should really invest time and money to build the infrastructure of tomorrow and not just see the short-term return on investment.
Absolutely, and I think to your point, Alexis, is that time to market is essential. We see in the US, we've seen more and more players that whatever the regulation is or the question mark around it, are starting something, and then we'll see. And in France, we don't have, I guess, this culture, for the good or the bad, I don't know, but we don't have this culture. And most likely, we are taking our time to ensure that every single aspect of the question is perfectly understood and thought again and again and again. And therefore, we are losing the market shares to foreigners, I would say. And that's a pity.
Thank you. Yes, and this requires a very different approach to risk. With MiCA, the EU has established one of the most comprehensive regulatory frameworks for crypto. How is this influencing your clients' portfolio, companies' strategies? And how do you view Europe's position in the global race for digital asset leadership? Maybe let's start with you, Andy.
Yeah, MiCA is a catalyst for our industry, right? We've been working and waiting for it for a long time now. Now it's here. This is what financial institutions have been waiting for. We have been talking to banks for the past 5 years. Many of them said, yeah, well, all really interesting, let's talk when the regulation is here. So now the time is ready, and many institutions are launching their offerings. I think Europe is now positioned to be a leader globally when it comes to digital assets. Many other jurisdictions are following. Latin America is very active. UAE. Turkey, I don't know if many of you know, but Turkey actually released a new regulation also January 1st, which is very similar to MiCA. I learned here today that in France, 10% of people hold crypto. Well, in Turkey, it's actually 50%. And every third person has an account on Binance. This country is crazy about crypto at the moment. Every single bank in Turkey is launching an offering. And again, very similar to MiCA. Now, of course, interesting is going to be the US. The US was literally inexistent in institutional crypto for the past 4 years. Now, within a few weeks, this has completely changed. With the current chaos, we don't really know where it's heading in the US, but the sentiment is quite positive. The US are going to do this much quicker than we have been doing this here in Europe. So I think we're going to see a lot of momentum. If we ask the same question again a year from now, is Europe still the leader? Maybe we'll have a different answer.
Well, are we the leader? I don't know. We've been a leader of regulation, that's for sure. We need now to monetize MiCA. I think a lot of people have been waiting for that. I think it brings a lot of legitimacy to the asset class. It's to the relation to the questions before. I think it's an industry that we're looking for legitimacy, and a lot of people are waiting for MiCA to announce projects, and we're still waiting for a few announcements. Exarch cannot talk today about what they do, but from an investment perspective, we're lacking behind a lot. Americans know how to invest in companies. They know how to build an ecosystem. They know how to make it thrive and to build like global players. Europe has not been so good. It's not a Web3 topic. It's a global tech topic. We don't have mega European funds that can, invest in companies in later stage. We don't have a strong IPO scene, but we need to develop that. We have only a few funds in Europe that can really invest in this industry because obviously first you need LPs that understand the asset and allows you to actually invest in this space. And then you need to find the good companies to actually do that. You need to be able to invest most of the time in tokens as well, and in new type of organizations such as DAOs, etc. So, the whole investment scene was not prepared actually for that, and it's something new that maybe takes time to digest. Maybe in Europe we ingest or digest things a little bit slower than in the rest, because as we said, we want to border everything and make it surer than in the US. But it's obviously not too late. We have amazing players. We're very good at innovating. We have an amazing number in Europe of Web3 startups. Now it's just our responsibility as investors, industrial players, to actually make it so that we can finance and help those companies to develop and realize their full potential.
And I think there's going to be a spillover effect from the US in terms of funding. Over the past years, in investing from US investment firms was on a very low level. If us as a European startup went to the US and tried to convince investors, that was very difficult. I think that's going to change now. I think large US investors will become much more active, and US investors have a tendency to invest globally. So I think there's going to be a spillover effect that we'll see here in Europe from the US.
Jérémie, there's an ongoing debate about the risk of re-centralizing the crypto ecosystem as institutions get more and more involved. How do you see today the balance between innovation and institutional control playing out? And to your opinion, is there a lot of risk of losing the Web3 ethos, original ethos?
Thank you for the question. So basically, Fireblocks is a self-custody solution, meaning that we are solely a technology provider offering the possibility to our clients, our users, to self-custody their own assets, offer direct custody for the assets of the client, most likely what will the bank do, or even to be a Fireblocks beast, I would say, and themselves create non-custodial wallet from their perspective, meaning deporting the ownership of the key and therefore the assets from a regulatory standpoint to their end users. So basically, we are giving the means for this sovereignty, digital sovereignty over the assets. And we see more and more, I would say, crypto players, crypto native players, exchanges that are trying to do that. By the way, from a regulatory standpoint, it's also, I would say, a shortcut to perhaps bypass somehow the custodian question. And we've seen Web3 projects, tokenizing reward asset, for instance, that are taking this path and going straight to the point. The main thing here is that ultimately, and we were discussing it, if we are all asking for trust, because trust is really what brings balance to the cryptos. If we are all asking for trust, and we do think that banks, traditional banks, have a role to play here, there is a paradox. The paradox is that the decentralization is coming with a very important re-centralization, even perhaps extreme re-centralization, around some players that already have different, I would say, departments that are perfectly mastering the asset management, the wealth management, the custodian, the transfer agent, etc., and that will quickly blockchainize all these processes, streamline them, and, for instance, run a stable coin, issue a money market fund, tokenize the part of them, and make the distribution. And these ones will be the winner in the future because they will seize the decentralization to be the main hub in the future, but with an extreme decentralization. I hope it was clear, but that's really a a path, I think. Absolutely.
Andy and Alexis, one last question within the 5 minutes we still have left. Projections for 2025 are quite optimistic. We have a diversification of use cases, employment growth, institutional support to a certain extent, and yet we still face another challenge, which is a global trade war. How do you see the development of the institutional digital asset space in the coming years? And what sectors or use cases, in your opinions, will drive the ecosystem to next levels of growth?
Yeah, on one hand, we have this US debacle at the moment with these tariffs, which caused a lot of volatility, billions of dollars and euros being destroyed, causing a lot of uncertainty in the market at the moment. So in the short term, we might see some delays in decisions. Some projects might take a little longer. If this drags on, this might have potentially an impact on global supply chain technology. All the big chip manufacturers, they dropped 30% since the beginning of the year. We're going to feel that eventually, and we need the technology. We need the underlying components. So that might have an impact. I think despite these macro risks, The long-term structural benefits of digital assets remain unchanged. We've been working on this topic for many years. The regulation is now there. So I think all these offerings, crypto, of course, number one, tokenization of real-world assets, on-chain post-trade settlement, cross-border payments, stable coins. These are all very solid use cases. They might take a little longer than we expected for the next few months. I hope not, of course, but the overall outlook hasn't changed.
And on my side, I think we can have some very positive aspect for European players. I hope if you read the papers and we all read the same news, I think it's a wake-up call for Europe as well to be less maybe dependent on our big American uncle that's financing the late stage of all our startups, etc., etc. So maybe it's a moment of self-realization for Europe of their responsibility in building European players, building their sovereignty tools, having those players that can really play against the big blocks of the US and China or Asia in general. So I think it's very positive. In terms of projects and the main topics, they remain the same. Everything is ongoing. Projects take time to, especially if you're dealing with institutional players. They have a different relationship to time than small startups. So those projects take time. They're, in their way. Stablecoin, RWA, those topics are, well ongoing. And the same goes for, the price of, the access to the asset class. The only impact there, of course, is volatility, but it's another topic.
Jérémie, 2 words for the end.
Time of experimentation is behind us, and we need to move forward fast. Just very quickly, it's not only about cryptos, it's about blockchain as a whole. Indeed, there are a lot of use cases that are coming from non-financial corporations. You mentioned the supply chain, that's absolutely true. And basically for finance, it's also seizing the aspect of who is owning the risk, not being afraid of taking it, instead of relying, for instance, on turnkey providers. Taking the risk on the balance sheet is something positive if you want to grab the money. And it's also a matter of considering as a whole the uniformity of money that you were mentioning, Andy.
Thank you so much for your insights.